2 weeks ago, we made the case that there was a secular rotation to dividend yielding stocks, more blue chip stocks, and away from growth stocks that have been dominating for the last number of years. If that is truly the case, we should be able to see and quantify the potential for appreciation in these blue chip dividend yielding stocks using point and figure analysis. And that is what we're going to do today. Welcome to Power Charting. I'm Bruce Frazier, your host. 2 weeks ago, we explored this idea in Power Charting with an analysis of the S&P 500 Dividend Aristocrat ETF, which is S&P 500 companies that have paid dividends consecutively for 25 years and in addition have grown their dividends for 25 years or more. So I encourage you to go back, go to the Stockcharts TV YouTube channel, drill into my power charting page, go back 2 weeks to the Rotation Nation webinar, and in that have a look at the thesis that we put forward. So here you can see on this chart, this rotation to dividend producing stocks this is a weekly chart of the NOBL Dividend Aristocrats, NOBL's the symbol. And you can see that there is a definite theme of higher highs and higher lows in the Dividend Aristocrat index, which is acting better than the S&P 500 itself. And these are all components in the S&P 500 that just happen to have a very competitive dividend structure. So you can see here in this chart, which is in this video, that there was a long period of time where the Dividend Aristocrats were just market performers going back to 2016. This is the sideways relative strength line. But the Dividend Aristocrats were rising in value and were in an uptrend. And then late in 2018, the Dividend Aristocrats all of a sudden became dominant leadership. And so they became dominant leadership because they dropped less in the fourth quarter of 2018 than the S&P 500 itself. And when they rallied at or better than the S&P 500 from then on. And you can see that there's a really nice uptrend in the relative strength, which really demonstrates this rotation at work. And so we want to go in and look at the individual components that are in the Dividend Aristocrats, which you can see those here by going into the ProShares page and having a look at the individual components that are in here. I have done point and figure analysis on all of these, but we don't have the time to go through them all. But what I'd really like to do is just do the drill with you so that you can then go through and look at these on your own. And then of course, there are many, many other great dividend stocks out there that are in the S&P 500 and are in other indexes that could be very compelling. We think that the very low interest rates in the bond market is driving demand for these stocks, and the bond market, as we all know, is so much larger than the capitalization of the stock market, especially in the US. And so you can imagine that there's a tremendous amount of money that could break free of the bond market and go into stocks and into these great companies that not only have yields that are competitive or better than the US Treasury yields, but also have the ability to grow those dividends over time. So let's get to work here and have an analysis. Now, let me explain that the idea here is that if these stocks have growth potential, if they are going to be the rotation that the market goes through from here forward, then we should be able to see accumulation or reaccumulation characteristics in the point and figure charts of these stocks. And that's what we're going to do today. Our first analysis is going to be on the ETF itself of the ProShares Dividend Aristocrats. You can see here on this chart that the count that we have goes across 13 columns, and what we've done is we've done ATR scaling here, 3-box reversal, and I will cover the method that we use in each of these stocks that we're going to look at. This is 13 columns across, 0.78 scaling, and so you can see that the analysis shows, actually I did this chart a few minutes ago and we had 0.79 scaling, so I'm going to use that. We have 30.81 points of appreciation potential in this very well-defined reaccumulation area that has formed. And so then you can see that if we add that to the low, in this case it's 56.16. The math isn't going to be perfect here because I'm using slightly different numbers, but this count takes us up to 86.90. So up here is 86.90, and excuse my penmanship, but this is a potential appreciation of almost 21% from the low here, and so this appreciation potential tells us how much the NOBL ETF potential has to appreciate going forward. Just to be clear, this appreciation potential up to this 86.90 price target is actually 21% from the current price of 71.72. So this is a 21% appreciation in an index of S&P 500 stocks. The S&P, we would argue, would go up a little bit less than that because these are the stocks that are going to dominate the performance of this index if this hypothesis is correct. But anyway, keep in mind there's 21% potential for appreciation from here, from this price. So we pretty much described the agenda for today. So we are going to use our proxies of the NOBL versus the FDN, which is the internet components, and then we're going to look at the some NOBL individual components and do point and figure case studies on them. We've already looked at this chart. Here is the First Trust Dow Jones Internet Index, which has the FANG stocks in it and other growth stocks. So it's a really good proxy for growth. And you can see here that there's a distinct difference in the way that FDN is trading compared to NOBL. And here there's a breakdown of this, what appears to be a distribution area, and the relative strength has turned down on the weekly, which is an important long-term trend characteristic. You can see here that in mid-2016 that the Dow Jones, First Trust Dow Jones Internet Index went into an uptrend above its long-term relative strength moving average and stayed in that uptrend all the way to mid-2018. Well, now we have a flattening out, a test at a lower high in 2019, and then a breakdown. So the consideration here is institutions look at this relative strength analysis, and really since the beginning of the year and since the middle of 2018, a year ago, that these stocks have not been contributing to institutional performance. And when that happens, they start to become a little bit more cautious about ownership in these stocks and start to reduce their holdings. They never really get rid of them completely. They just reduce holdings, and that in and of itself creates pressure for selling in these stocks. And so when we go back and look at the NOBL, we can see where the funds might be going, is that they're going into these yielding internet or these yielding stocks which have more blue chip nature or quality to them and more of a dividend growth quality. Okay, so the last thing that we'll look at here is just a relative strength of the NOBL Dividend Aristocrats to the Internet Index. And what I've done is I've done an analysis here of this relative strength line, which is really kind of a classic Wyckoffian analysis. So big downtrend, which is when we have a big downtrend, that means that the dividend stocks are underperforming growth, in this case the internet index. And so long-term downtrend that goes all the way back into 2015. So big trend channel decline, throws under the bottom of the channel in 2018, which is the blow off in the internet growth stocks. And so this is really a blow off for all growth, in my opinion. And then a very sharp rally into an upthrust type action in the dividend stocks with a pullback which occurred into the middle of 2019, completes a base, and now we have a really nice rally, another good rally of dividend stocks into the current period that we're at in October. And this is producing a minor sign of strength. So what we would look for here is really an inability to be able to pull back very much, stays at or above this resistance line, which is in red, and hangs out there and then continues to rise, which shows that the dividend stocks are dominating in performance. So that would be the main theme that we would look for here, and just a classic Wyckoffian structure in the relative strength of these two ETFs to each other. Okay, so now let's get to the point and figure charts. We should see in these stocks, we should see accumulation or reaccumulation type structures that are easily countable for higher prices in the accumulation or reaccumulation. In this case, this is United Technologies. United Technologies is a classic industrial company. And so we have two counts that we want to study here. And the first one is this area right here. And this count is 7 columns times 3 box reversal times 2-point scaling, which you can see here because it's over 100 standard scaling, gives us a count from the 122 low, gives us a count of 122 plus, this is 42 points of count generated in this small area. This is just a trading count, takes us to 164. And then from the count line, it takes us up to 172 here. So substantial appreciation just in this count, trading count. So then let's clear this. And then we have a much bigger count available to us of 19 columns. And so 19 columns takes us across here, 2, 4, 6, 8, 10, 12, 14, 16, 18, 19, takes us right to here. Here's our backup right there. This gives us 114 points of count. So the math is 19 times 3 times 2. And that gives us 114 points of count. Added to the low here at 99, takes us up to 213. And then additionally, we have a count from the count line, which is at 130 right here, takes us up to 244, even higher. So we have substantial count potential in United Technologies, and notice here that it's just getting ready or attempting to pivot up and out of this accumulation or reaccumulation area, and then also notice the higher lows throughout. So this is a very interesting stock. Then let's go on to Johnson & Johnson. So 2.1 yield on UTX, by the way. Johnson & Johnson has a count which is across. We're going to just take 21 columns across right to here. And this 21 columns produces 63 points. Let's do this. Let's go down here. I want to show you this count here, which is a count that goes to 63. Oh, 74. So here's the count, 74. And we have a count across here that gives us 63 points of count potential. And it takes us up to 137. Well, notice where we went. We went right up to 138. So this account here generated, and I think we went all the way to here, produced this count, which also stopped the advance. And then there's also a count at 154. I just want to point that out to you. The upper count, which is more important, here's a 5-column count here, which is a trading count, which gives us 30 points of potential, 2-point scaling, takes us up to from 120, which is here, takes us up to 150. So we have a count just above the breakout area, 150, and also to 158. So the larger count that we have is 19 columns, which goes all the way across. And that produces a count of 114 points in Johnson & Johnson. And so 114 points, we're going to take that count from the low at 116 plus 114 points of count that's generated takes us up to 230. And then we have from the count line at 128, we have a count that goes up to 242. And so we have huge potential for higher prices in Johnson & Johnson. And this has a count, this has a yield of 2.8%. Okay. Moving on. We're going to one that I think is particularly interesting, and this is Granger. And so Granger has a count, 2 counts that are interesting to us. We have a count here. Now keep in mind that this is 4-point scaling. So 4-point scaling is very, will produce a lot of count quickly. So we have across here, 6, 8, 10, 12, 14, 16, we have 17 points across here. Well defined. We can see that we want to count to here because there's a big decline, which is a sort of a climactic move back to the low of the trading range, and then it tests twice, has 2 secondary tests, and then rallies up and produces a trading range. And so this count here generates 204 points of potential, and we're going to count that from the low at 256 plus 204 takes us up to 460. And then we have a count from 280, takes us up even higher, plus 204 takes us up to 484. Wow. So significantly above the prior high, which is a 364. So you can imagine here we are around 310 right now, and 364 is the prior high, which is conceivable that we should be able to rally back up to the prior high. But also we have accounts here, 460, 484 for a tremendous potential here. And this is the kind of stock, these are the kinds of stocks that could propel the Dividend Aristocrats to that 21% rally in the entire index, which could drive the whole S&P 500. So now let's do something even more interesting, which is let's go to, let's go all the way across. Let's change the color here. So let's go all the way across here. And let's count 33 columns times 3 times 4 gives us 396 points of potential. That's how big this count is, substantial. So we take from the low at 256, we add 396 to that, and we get a count up to 652. This is an absolute campaign structure. So this would be, and now we don't know how long it will take for the point and figure to be able to resolve itself to those higher counts. It may take a long time. It may never get to those levels, but this is a beautiful point and figure structure. So then we have a count from the count line, 280 plus 396 takes us up to 676. So there's a huge campaign potential. And also notice this about Granger right now, is that look at this pivot off of this backup that we have. Classic Wyckoff structure, backs up, jumps out, shows a sign of strength, and is now into the resistance area. May need to do some pausing here and consolidate for a period of time. But if there's no deep pullback, this could just continue on, jump out of this base area, and then Granger could be off to the races. So this is a very interesting structure. Okay, so let's clear all this and do another one. And so here is Emerson. So Emerson is an interesting stock, industrial company. It has 2.9% of yield, very attractive yield. So we have 13 columns of potential across here, really well defined. You can see the breakdown that's occurred and then a rally attempt. This sets up the segment that we're interested in counting here. So let's do let's draw this. And so we can see that we're going to go across 13 times 3 times 1 point scaling gives us 39 points of potential. From the 55 low, it takes us up 55 plus 39 takes us to 94. And then we have from the count line, which is 63, we have 39 points, takes us to 102. So there's the potential for that area. We get to that area, a substantial move, then what we would want to do is extend our count across and do additional segments. And so you can see that there is much bigger potential for Emerson, and I encourage you to do those larger counts as practice and study those. So let's go on and do another one. So you can see here that there is a lot of potential in these aristocrats, and that the dividend stocks do appear to be under what looks like attractive appreciation potential. And so let's now do Genuine Parts. Genuine Parts has a trading count, which is 7 columns. This takes us up 21 points. One box scaling, this produces a count of 108, which is pretty close to where we are, to 114. So there is a swing count. But then we have a much bigger count that goes back 19 points, 19 columns. And so that gives us a 57 point potential. And so it's a mixed count because there's part of the count that's over 100. We must adjust for that. But just so that you can see the potential here, 87 plus 57. So we have 57 points of count. And so that takes us to 144 from the low, and from the count line, it takes us to 150. Once we achieve that objective, which is up here, once we achieve that, we can see that there's much bigger potential for count out here in Genuine Parts. Genuine Parts yields 3%. Okay, and then moving on. We have time for a few more. Let's do them. Let's do PPG, a great old industrial company, has a 1.7 yield. You can see that not all of these stocks have super high yield. It's just that they have a consistent dividend history to them and the consistency of raising their dividend year in and year out. So you can see here that there's a 7-column swing count here, and this takes us up to the area of, and this is 42 points because it's 2-point scaling, 3 times 7 times 2. And so added to the 106 line, it takes us up, really should be the 104 line, takes us up to, call it 146 right here. And so 146 is a swing trading count, very attractive. Notice how we're attempting to pivot up. PPG is attempting to pivot up and out of this area right now with a large completed count. So we also have a count that goes across 21 columns. So it goes 21 columns across. This gives us an objective. Again, this is a mixed count of 102 points. So 102 points is substantial. And so we have from the 93 area, which is right here, and we'll take this one count, 93 plus 102 takes us up to 195. So substantial appreciation potential in PPG. And this count also, you could take this count all the way over to here and take it across, and you would have a substantial count potential for much, much higher prices. So lots of potential in this stock. We have time for a couple more. What do we have here? Becton Dickinson. Okay, so here, this is interesting because this is 4-point scaling. And so with 4-point scaling, we want to take account. This is 15 columns across, gives us 180 points of potential. So 2, 4, 6, 8, 10, 12, 14, 15, right there, 15 across. And so that's 180 points of potential from the current price of 257.77. And so from the low, we go 208 plus 180 takes us to 388. And then if we take from the count line the 248, let's just do this so you can see where we're counting from. This takes us up to 428. So a substantial appreciation potential in Becton Dickinson. So this is a very interesting stock. Also has a 1.2 yield, probably the lowest yielding stock we're looking at. So, but again, our interest is appreciation. We are interested in these dividends because we think tactically this is where the market is logically headed. It's trying to generate yield, and there's going to be fund flow away from bonds, and it's going to be attempting to find places to invest for yield, and these high quality industrial names, blue chip names, are going to be the classic place where they're going to go to achieve yield. Okay, so I want to show you one more. AFL, you can look at that on your own time. McDonald's, huge count here in McDonald's. And so I'll let you look at that count on your own. We only have a few minutes left. Here, I want to show you that everything's a mixed bag. This is automatic data processing, ADP. And I want to just point out that ADP appears to have a distribution structure. So I've taken 9 columns across. And so from 172, the high, 9 columns times 3 times 2 is 54 points, counts down to 118. So there could be trouble here with ADP. And on that, I want to thank you for joining me today for this discussion, and we will do a lot more of this point and figure work in the future. Let me know what you think about doing this point and figure analysis. Take care, everybody. See you next time.